Hello everyone, I hope you are well. I am glad that you are in this lesson, and I expect that you will follow in detail everything that I will say in the lesson. Also, you can write it down because that way you will remember it best, with the fact that technical analysis is very detailed and everything we will do below will be based on very small details, but first starting with the basics. So we're just starting to do the basic stuff as far as direct analysis for trade is concerned. Strategy, or we can better say the way and style of trading, but the word strategy does not exist, because if there was a specific strategy that could be followed technically, then everyone would be profitable. Instead, in addition to the strategy that can only be followed technically, there is a global strategy that concerns psychology, discipline, disciplinary plan, technical analysis, and many, many other things, such as the fractal nature of the market, which I will talk about in the next lesson. I expect that in this lesson you will once again concentrate and follow everything I say. The order block is the only thing that is analyzed so that we can trade later. So, when you look at the market price, you will see that the algorithm, which is actually the handwriting of the market, is constantly complete orders and incomplete orders. This is what we did in the previous lessons. We can never analyze strong impulsiveness because in strong impulsiveness lies no kind of complete order that we can analyze and know based on it that we can ultimately profit. So, when we see strong impulses, we cannot analyze anything there, and there is no way and style of trading following impulses because they are often based on news, on fundamental analysis. They are also often based on certain volume warehouses in full order. And then it is necessary that we analyze the volume storage that is in that complete order so that they know that at some point impulsiveness will happen. Therefore, our job is not to follow impulses and to trade in order to rush the market in those higher or lower levels of strong imbalance, but the purpose and goals is to follow the analyses of complete orders that are constructed in detail, and in this way to know at what moment we still need to for impulsiveness to happen so that we can profit together. That profiting based on the knowledge of when this impulsiveness should happen is something that is the most complicated and something that takes many months and years of work so that they can specifically understand exactly at what moment it should happen, that impulse, so that they can profit. Because then, when the impulse happens, they will profit very quickly, regardless of whether you are a swing trader. Swing trader means that you trade long position trades on a 4, 5, 7, 8 hour time frame or 1 day time frame, regardless of whether you are a scalping trader. Scalping trader is not recommended and is not quality for trading because if we trade smaller time frames, we will most often be psychologically overwhelmed by smaller time frames and try to have as many trades as possible in 1 day. Mostly people who are from the system and are used to working 8 or 9 hours a day. They like scalping trading because that way they feel used in that day. When a trader who has started to learn starts to engage in scalping trading, the first thing he thinks is that in that day he has a certain number of trades and tomorrow he also has a certain number of trades. His idea as a trader is to trade when he sees a certain complete order on a smaller time frame and then access the market because he thinks he will earn more. Scalping traders think that if they follow small time frames, they will earn more because they see the algorithm more often. That's completely untrue, and that's not the case at all. It's the total opposite of all that, with the fact that they are based in the start on technical analysis, and they like technical analysis. They like to follow the details, but in the end, when they learn technical analysis, whatever that, regardless of whether it is bad or good, they eventually realize that in fact what is most important is psychology. Why is it so? Because technical analysis can be learned theoretically. You can learn something theoretically, but once you learn it, the question is how you will execute it in practice, and practice is called experience. Experience is traded, and experience is gained through constant work. And experience includes not only technical analysis, but also psychology, psychological experience, discipline experience, experience of patience, and this is the most important thing that binds swing traders as more successful than scalping trading. When you look at it, only about 0.03% of scalpers in the world are really profitable. Swing traders are much more profitable, very much more, so 50, 60 times more profitable are swing traders, that is, scalping trading. Why? When you trade swing trading, you have time to follow a certain trade, you have time to write a whole set of technical analysis details about that trade, and then to see and understand at what moment it should happen, actually a certain level of volume that later should forms a strong trend. You can follow many more different currencies, different indices, and in that way, in the end, you can create a set of many different algorithms and single out the best ones that you actually need in the end to form profitability. And in this way, one becomes profitable and successful in the long term. And in this way, everyone can ultimately profit. Not just knowing the smaller picture of the technical analysis fractal or the bigger picture of the technical analysis fractal, but putting together a whole series of algorithms. When you look at any technical analysis, when we look back at the chat now and look at any trend, people usually like. And now we're going to use those things that are often said on YouTube. Resistance and support are often discussed on YouTube or Instagram. People often like to say that. I agree, I'm not saying it's not valid, but it's not as simple as it seems. People often like to follow the transmissions of certain previous volumes. If this level is transmitted and then later this institutional candlestick is reached, that later a strong impulsive uptrend should occur. That's the way people learn, but it's the wrong way. You can't approach the market that way because it's a very simplistic way, and if it were true, every person in this world would be profitable. The most important thing to follow is the analysis of the entire trend. Let's say when we look at this impulsiveness that has arisen here, so this impulse that exists here, when we look at it, in order for us to know that it will actually happen at that moment, we must analyze not only the sale that exists from this works, but the structure, the whole algorithm that begins to form, even from this here area of 2023, the 5th, actually the 4th of September, all the way to the moment of November 30, 2023. Just a moment, it will seem to people as if it is a big period, and they don't have time to analyze so much, but it is the only and the best way to be consistently profitable. I'm going to put out a YouTube video of my trades from FTMO Pro, from my withdrawals, and that way I'll also show all the trades I have, what they look like and how long they last. One trade I'm waiting for is 17,000 euros right now. I've been waiting for it for 43 days. That means 43 days. I've been waiting for a capital of 17,000 euros from the trade I analyzed for a very long time. This part here, or rather what we will do later, is called preliminary support. Preliminary support is the name for an order block that begins to form in a certain trend, but later begins to make quality power of volume to the next algorithm to be formed. Buying climax as a buying peak, which usually must contain a mitigation block, so that later on from this third order block, because there are order blocks 1, 2, and 3, so that later on from this third order block, that impulsivity arises. Buying climax mostly that it contains, because it is a distribution in a smaller fractal, and we will also explain that. The impulsivity that exists here forms again later. There is even stronger impulsivity in the trend. And when we look at this order block in relation to these order blocks, we will understand why this is so. But that later. Now I'm telling you only so that you understand me as to how we will work. Last point, support. As the last point of support is actually the penultimate order block that creates a secondary test in this part of reaccumulation. Why reaccumulation? Because eventually we see an uptrend forming. Consolidation is a striking example that contains within itself 2 or 3 or 4 examples of consolidation that otherwise forms, which contains within itself redistribution, accumulation, and reaccumulation in a smaller fractal. And only later as the fifth order block from Wyckoff circle trading, or we can use the power of 3 formation, we will see that what is formed later in those situations. A cry is formed that contains a full command and most likely a high volume power. If we looked at the volume in the market, we would see that there is a high volume power. Based on the power of 3 concept that we see in this cry, it contains distribution, redistribution, again, redistribution and ending, accumulation that contains selling climax, secondary testing phase B, and only from that order block that reaches the previous order block of consolidation, we can expect that an uptrend should arise. Now, most people are shocked, and someone who has been following this for 2 minutes now, he listened intently, but he didn't remember anything. Don't worry, here I've skipped over 100 different steps that we need to go through just to explain how that detailed technical analysis that we'll be doing later actually works. Now let's go back to what we wrote above. The order block is what needs to be analyzed. Of all the order blocks we track, there must be a complete order. Full order is the same as consolidation, relative like-off, or constant like-off. Thus, consolidation is divided into relative like-off and constant like-off. Constant like-off contains profit if it is fully valid, which means that we trade on the basis of constant like-off. Relative like-off is something that is formed most often, but in fact it is a bait for what is completely valid. The order block always contains a complete order that is divided into consolidation, and consolidation contains classic consolidation, relativity, or constancy. Now let's explain further. Here I have drawn different market structures for you to see. This is uptrend, downtrend, distribution, and accumulation. And now let's take a look. The part that makes this uptrend, we will notice that in it, the order blocks are what? Selling. There are order blocks during the uptrend of sales and short sales that occur in a larger uptrend. So short sales that exist in a larger uptrend, we will see, or we can say we know that these things are order blocks. Order blocks are these sales. They contain a certain clue. They contain certain clues that make up a complete order. So the order blocks look like this. Impulsivity is just a presentation of previous investment. The method and success of investing the former is that impulsiveness when the latter should exist. And when we look further, we will see that there are also order blocks here, which in this case are in a downtrend. However, in a larger downtrend, when we look at the larger downtrend, then the order blocks are buys. And order blocks contain in themselves a complete order, traces on the market that are slowed down, and later impulsiveness presentation of the previous investment. Now that's where we stop. The presentation of the previous investment is what we analyze, and based on that experience later, we know if it is a place on the basis of which we profit. My students often surprise me, let's say beginner students, but also not experienced ones, because experienced students already understand that part. But when we look at the trend that has this striking difference compared to that short downtrend that is strongly impulsive here, we will see that it contains a complete order. This complete order is classified on classical consolidation, to relativity, or to constancy. Relativity and constancy happen most often. Constancy is what beginners always manage to bypass. Not constancy, but classic consolidation. This is what students always manage to get around very quickly. Why? Because they can perform that realization of what classic consolidation is. The hardest thing to get around is relativity. Relative Wyckoff is a complete order that is very similar to that of validity, which we will only work on later. That validity, which we will work on later, is very similar to relativity. So even then, relativity contains 50% of the daily algorithm. Between 50 and 70% of the daily algorithm is constant relativity in order blocks in a downtrend or in an uptrend. And then when you look at that relativity, you wonder if it's tradable, and based on your inexperienced initial analysis, you think it should be traded. However, in the long run, it's probably not profitable because relativity is something that doesn't make it profitable in the long run. And then you create a disadvantage for yourself that causes your potential market after 3 or 4 months to slowly give up or start looking for different types indicators on YouTube to make a quick profit. And all indicators are unprofitable. There is no indicator on the stock market. I have been dealing with the stock market for a very, very long time. There is not a single indicator in the world that can bring you long-term profitability that lasts. Maybe that indicator can bring profit in these first 2 weeks, but the question is not what will happen in the first 2 weeks, but what will happen after a month, a day, and that's a small period, or let's say after 5 years, after 10 years, after 15 years, because if you think of yourself as a trader who scales, who keeps training for a very long time, then there must be a real disciplinary plan that, in addition to a quality psyche, also contains a completely valid technical analysis. Technical analysis, to be fully valid, cannot just be learned in 5 days. I understand that a lot of people really want it, and a lot of people really want to learn technical analysis very quickly. And those people who show quick and easy earnings all over the internet, they know that very well and then collect publicity that way. However, it is a marketing gimmick that ultimately does not lead to profitability because there is no algorithm that you can learn in 4 or 5 days that will make you profit late. People completely misunderstand fast. Fast is an old job, but also a new job for certain areas in this world. And then they think it's something that anyone can do very quickly. That is not true, because if that were the case, then every person would start earning very easily and quickly, and virtually no one would have to work anymore. To explain why it is so and why it is unclear to people, because each person thinks for himself as an individual, I can do that. Anyone can do it, I agree, but in order to be able to, you need to experience, to go through certain trials in any job in life, not only in this, but in any, but these are quite difficult because these trials are not physical, but they are mental. And mental trials are much, much harder than physical trials. Physical temptation is impossible to approach in general mental temptation. It cannot even be compared. And this is the reason why most people eventually give up, because everyone has their own psychological limit. In order to succeed in this business, it is necessary to break through psychological limitations. If psychological limitations are broken, then you break new boundaries, and then you come to a stage where you are different from the majority, where you are a minority and different from the majority. In this way, you are one of the few who profit. Then people will come en masse who want to profit. They will ask you how you succeeded, what strategy you use. You won't know what to say to them. Why? Because you are simply not the type of trader who used no strategy, but used a breakout strategy. And that's how you manage to profit, by breaking the boundaries. This is the only way to succeed in the end. And it is completely unclear to people who have not broken through the borders. It is not clear to them how it is possible to break through further, because they do not understand that psychological structure that ultimately leads to profitability and success, the creation of a new mentality that is not suitable for the majority, but for the minority. When you look around the world, people know what the real mentality is. They don't see what it looks like. These are often presented and advertised in the same way, and when you look at the whole world, they exist very clearly, but only one thing remains. It remains that every person, in fact, ultimately cannot understand that all the people who try to profit, they are in fact trying to get into a system that is very complicated and very difficult. I'm back in 10 seconds just to pour a glass of water. I'm sorry, I'm just now there again, and I want to explain further. As for the algorithm we've been talking about so far, there are a lot of different algorithms here. When you look at this structure, structural analysis and structural events, you will see that all order blocks exist, regardless of whether it is a downtrend, whether it is an uptrend, whether it is a white box of distribution or accumulation. Now we will explain it very easily. All the short sales that exist during short sales, they are in the course of a big uptrend. Those are the order block things that we analyze. When we look at the uptrend, this uptrend contains more order blocks, which means more short selling. Of course, there are order blocks even in this imbalance. There, people will be surprised how it is possible that there are order blocks in the imbalance. There are how? Since they are on a smaller time frame, and when we look at a larger time frame, we will see that there is actually only one impulsivity or imbalance. When we look at these order blocks that make this selling a short trend in a larger uptrend that aims to reach a certain price level, we will see that these order blocks contain either classic consolidation or constancy or relativity. The same happens when it comes to a larger downtrend that contains constancy, relativity, or classic consolidation. In a larger downtrend, order blocks are buys. When we look at the order block before which we see a purchase, after which we see a sale, it is also a complete order, or we can say a classic consolidation, relativity or constancy of the Wyckoff, which later forms a downtrend or an impulsive uptrend. Wyckoff is not the only way on which profit can be made, but it is the way I teach students, it is the way I profit, and it is part of my disciplinary plan that I follow. There are several different types, but in the end, they all lead to the same thing. They all lead to that particular Wyckoff. Why? Because everyone has to trade in places where impulsiveness is supposed to happen. And perfectly well, based on the Wykes, we can see impulsiveness later. Not only based on the narrow picture, but also based on the broader picture, based on analysis, not only institutional candlesticks or certain volumes that exist in the market, which are seen in previous structural developments, but based on all the details that make up a much larger time frame and that current order block that is in the smaller fractal, and even the order block that is in that order block on the smaller fractal. It seems very strange to people now. It also looks like something that may be easy, may be hard, maybe they can learn it, but be one-sided in that sense. Look at one quality direction, and that is the direction of trying to enter into a pure concept of learning without any thoughts that will burden you from the side. Simply study and work hard. Don't try to make your mindset worse with certain indicators that you believe you can profit from. When we look at this structural part, we will understand that the selling that happens in the uptrend is called reaccumulation. It's a Wyckoff called reaccumulation. When we look at the purchases that happen in a larger downtrend, it's these two purchases, they're called redistribution. When we look at the order block before which there is a buy, after which there is a sell, it will be distribution. And when we look at sales, order blocks, purchases, it will be accumulation. You can write that down in your mind now. So order block sales, before which there is impulse buying, and after which there is also impulse buying, it will be reaccumulation. Order block before which there is impulsive selling, and after which there is impulsive selling, that will be redistribution. An order block before which there is impulse buying, and after which there is impulse selling, that will be distribution. An order block before which there is impulsive selling, and after which there is impulsive buying, that will be accumulation. These are the four types of order blocks that you can see in the markets. There is no fifth type, sixth type, seventh or eighth type, but there are these four types that are constantly repeated. Order block, which is called reaccumulation. We will explain how it looks on a smaller time frame, how it is understood, how to review the construction of that algorithm, and then based on that, we will follow the order block. We have already explained in previous lessons why it is used. Accumulation of volume so that the presentation of impulsivity can be achieved later. So impulsivity is a presentation of a previous investment. It is due to an already completed business that is successful, which later needs to redirect that power of volume into the growth of the price of a certain currency or a certain index. When we look at this reaccumulation, now stop the video and write this down. I'm a bit too much, because without it, you can't continue it. Now I'm starting to explain reaccumulation. Reaccumulation is the part that is in short sales that make up the structural part of buying. So the structure of the market in a larger uptrend is constant buying. What makes up reaccumulation is more small block selections on a smaller time frame. That says on this UK 100 index, it would be, we need to look at a smaller time frame so that we can analyze the specific system of Wyckoff in that part. You can see when you look at the smaller time frame, many different structural parts. It can look like this, it can look like anything, however you want. But one of the correct schematic view would be this preliminary support, which is in fact support for the descending order block, which is the highest level in that order block, because there must be a buying peak, because at one point the short-term selling that we talk about non-stop must start. So short-term selling in the uptrend, in at one point it must start, and it must contain the highest level. And that higher level is called the buying climax or buying climax. And later on in that part, a downtrend occurs that is not immediately impulsive at the start, forms the last point of support at that highest level, after which follows that impulsiveness that begins to create consolidation. Why is consolidation created here? Because consolidation is a complete order, and a complete order is located where? In the previous impulsivity. And after that, we will see an impulsive uptrend that contains a certain algorithm. Also, reaccumulation could very well later form an uptrend again. When we look at the next part, this will be a redistribution. All order blocks, and order blocks are purchases in this larger downtrend. It will be all order blocks, all short-term purchases in this downtrend. There will be redistributions. Redistributions can look a number of ways when we look at a smaller time frame. A correct redistribution will look like this. When we look at distribution, that means there is a purchase before that, which means that this is not a market structure, neither an uptrend nor a downtrend. Let's say, imagine this part here as a distribution. If we looked at a smaller time frame, before that order block, we see a purchase. After that order block, we see a sale. Says that most likely in this order block, there is distribution. And then we would need to observe it when we look at the accumulation. It will be, for example, this order block before which there is a sale, after which there is a purchase. Otherwise, accumulation and distribution, it is like a swing high, a swing low. So the lowest level before which there is like of circle trading or power of trade, which later forms a certain trend, irrelevant, is it an uptrend or a downtrend? But it is necessary to carry out an analysis so that later it can be best understood. This is just a basic explanation of what actually makes a Wyckoff and how to approach technical analysis based on what kind of algorithm and how to track the details, technical analyses. This is the most basic for now. It will still work very, very many details. It will take a sure eye. We can say somewhere between 100 or 120 lessons to make from the occasion. So, with the fact that I have some experience considering the huge number of these teaching people in this business, between 100 and 120 lessons need to be made in order to eventually have a complete understanding of technical analysis. After that comes experience, and after experience comes profitability. Between learning and experience stands constant persistence and work. So I expect you to be persistent, that you will work constantly, that you will try hard, and I wish you all the best. See you in the next YouTube lesson. All the best. I wish you greetings.